Institutions are here, and they're buying. For years, crypto was the Wild West, a playground for retail, rebels, and early adopters. But in 2025, that era is over. Today, Wall Street is here. BlackRock is tokenizing treasuries. JPMorgan is building on public blockchains. And the world's biggest asset managers are holding crypto on their balance sheets. But they're not buying just any token. They're buying specific coins, backed by compliance, cash flow, or critical infrastructure. Before we dive in, a quick disclaimer: crypto assets are high risk. You could lose all the money you invest. There is no consumer protection. This content is not financial advice. Always do your own research before investing. Why institutional backing matters in 2025. Massive capital, one fund deployment can move markets. Long-term conviction: institutions aren't flippers, they're strategic accumulators. Legitimacy and compliance: these tokens often meet regulatory and KYC thresholds. Infrastructure overlap: TradFi is investing in networks that fit their models, RWAs, DeFi rails, data layers, and custody-integrated assets. Ethereum, ETH, the institutional core of Web3. Ethereum is the institutional base layer. It has ETF approvals, major bank integrations, and powers most RWAs and DeFi protocols. L2s help institutions build cost-effectively, and its smart contract dominance continues. ETH token utility. ETH powers gas fees, enables staking, uses a deflationary burn model via EIP 1559, and serves as the base asset for RWAs. ETH is integrated into most tokenized financial products and ecosystems. ETH institutional forecast. ETH flows have increased post-ETF approval. More RWAs mean more ETH utility. Analysts forecast a price range of £4,000 to £7,000, with bullish targets beyond £8,000 if L2 adoption and staking scale further. Ondo Finance, Ondo, tokenizing Wall Street. Ondo issues tokenized treasuries like OUSG in partnership with BlackRock and Coinbase. It's built by Goldman Sachs alumni and is rapidly becoming the standard for institutional RWA access. Ondo token utility. Ondo governs the protocol, influences product strategy, and could be integrated into fee-sharing models. It represents ownership and influence over the RWA tokenization layer. Ondo institutional forecast. Ondo surged from under 10 pence to over £1 in early 2025. With Coinbase listings and institutional adoption, analysts forecast £2.50 to £5, with £10 plus upside if rewards or fees are added. Chainlink, Link, the institutional Oracle standard. Chainlink powers data for DeFi and TradFi, including partners like Swift and DTCC. It enables RWAs, CCIP cross-chain messaging, and proof of reserve audits. Link token utility. Used for data feed payments, staking for data accuracy, CCIP messaging fees, and validating asset reserves. It's the economic layer for secure Oracle data. Link institutional forecast. Link stayed undervalued but is gaining attention with CCIP and staking V2. Forecasts estimate £30 to £50, with potential for £75 to £100 if institutional integrations deepen. Polymesh, POLYX, the compliance chain for securities. Polymesh is a layer 1 built specifically for security tokens and compliance. It's tailored for KYC, AML, identity verification, and permissioned finance. POLYX token utility. POLYX powers all transactions, validator staking, compliance contract execution, and governance of the Polymesh chain. POLYX institutional forecast. POLYX ranged under 30 pence in 2024. If security token exchanges launch, forecasts suggest 75 pence to £1.50, with £3 to £5 long-term upside in a global RWA cycle. Avalanche, AVAX, subnets for institutions. Avalanche enables institutional subnets for JPMorgan, Citi, and others. It supports private and permissioned chains, DeFi apps, and massive tokenization volumes. AVAX token utility. AVAX is used for gas, staking, and launching institutional subnets. Future governance rights will allow holders to influence protocol direction. AVAX institutional forecast. AVAX returned to £40 plus in 2025. If institutional subnet launches expand, analysts expect £75 to £125, with £150 plus upside in high adoption scenarios. Let's do a quick recap: the top 5 institutional coins. Ethereum, the RWA, DeFi, and ETF base layer. Ondo, real-world yield meets institutional crypto. Chainlink, Oracle data backbone for TradFi. Polymesh, regulated layer 1 for tokenized securities. Avalanche, subnet builder for banks and hedge funds. Why institutions pick these tokens? Each of these coins aligns with compliance, capital flows, or financial infrastructure. Institutions want tokens that plug into legacy finance while still leveraging crypto scalability. How to position your portfolio. Balance long-term holds like ETH with mid-cap growth, Ondo, Link. Add exposure to regulation-aligned coins like POLYX. Watch subnet and RWA news for AVAX entries. Tips for institutional themes. Prioritize tokens with real-world partners, fee capture mechanisms, and documented tokenomics. Avoid coins that rely solely on narrative or hype. Risks to watch. Institutional cycles move slowly. Regulation could stall adoption. Many projects still rely on centralized components. Final thought. The next bull run isn't retail-driven, it's institutional. And these 5 coins are building the rails for that future. Institutions are already buying them. The only question is, are you? This is CryptoPulse, deep dives. Real insights, always objective. Subscribe for daily updates on crypto infrastructure, investing trends, and the future of Web3 finance.